The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour. My pleasure to be here Monday through Friday at noon till 1 p.m. I'm actually recording this at 8 a.m. pre-market opening. So we're looking at the futures already up 131 points in the Dow. The E-mini is up 12. Let's just go through the numbers. The E-mini right now has a trend line resistance. It made a high of 2741.75 on the 22nd of May. Went down to 26.75 round number low, bounced, and it's had for at least the last, today will be the fourth session, very wide movements, but basically what we're looking at is it needs to pierce the resistance at 27.26, 27.28. If that happens, if it closes above that, there's a chance that it could actually try to tackle the 27.41 high that was made on the 22nd. If there is a failure here, and I'm looking at the potential for an H pattern in the daily, the weekly here in the middle. So on the left, you can see the daily chart. The MACD is now negative. The stochastic's way down at 57. On balance volume, the blue line is not very good. Relative strength is holding okay. It's at about, I would put it at 53%. Over 50 is good. So it's this weekly chart that's made on lowercase h that goes to a lowercase m that is absolutely imperative. Why? Because it has held quite nicely and closed above the 9-period moving average so far for 4 weeks. So this is the fourth week. We'll see if it closes there today. 26.99 is the key support, and it's at 27.18. I don't know what's going to take it down some 20 points, 200 points in the Dow, unless some real bad news when the jobs report comes out. However, this is what I'm looking at. The MACD has slowly improved. This is the moving average convergence, divergence, and the histogram bars have improved. And the stochastic has rallied and the on-balance volume has rallied. The price is not broken out because it's still stuck in this range, but this range could widen and still be in the range. It could be much wider between 2,800, the highs over there, and the lows of the 2,600 to 2,550s. So within that context, we're looking at the 120-minute chart, which gave a very strong sell signal yesterday at the opening as we gapped down. And now what we're looking at is the stochastic has turned up. It's at 59%. The MACD's crossed positive. They're not great looking, but they are improving. Now, what's important, I'm going to go to the S&P cash to show you something that, because we closed yesterday, the month of May, let me move away from the 120-minute chart. Look, the month of May closed again above the 9-period moving average, which is at 26.37. We closed at 27, we're at 27.05 right now. Yep, that's where we closed. So the last time that there was a close below the 9-period exponential moving average, now listen to this, was February 2016. The range there was 1962 to 1810. That was the low. 1810 was the low of February of 2016. That was the last time we closed below the 9-period moving average. We've pierced it just in all that time. We've pierced it 5 times, always closing above. That says to me that this 26.37 9-period exponential moving average is becoming more and more a magnet. It has been a springboard, but the more times you keep trying to test it and you go below it, the greater the chance at some point you will close under it. That's just the way I'm looking at it. And I'm going to be doing a webinar middle of June. You'll see it front page of TFNN on what to expect in the second half of the year. Remember, when we looked at the January high of January the 26th of 2872 in the S&P, it was 26,616 in the Dow. Then that very sharp slump to the February 9th low. In this case, the low was at 2532. The week of the 9th of February, rallies back up to the 2800 level, and then comes back to the 2552 area, does not take out the February low. The Dow did. So this is a very important period. Why? because this H pattern that goes to a lowercase m, you'll see it right here in the Dow. I drew it in a long time ago, and INTU, that template is still in force. My thinking here is from the way the market moved yesterday, we had been long, we got out of the long position of the Dow, we went short yesterday at the opening. We'll have to see whether or not that 9-period moving average that the Dow was closed under for the last 4 sessions at 24,634, that's the 9-period moving average, whether it does that again. Now, let's go through the numbers. So the Dow right now, the YM, at YM, this is the continuous contract, is up 135 points, still under the 24,614 9-period moving average. The MACD is weak, the stochastic is weak, but has a little bit of a turn to the upside, so it could be a bit of a bounce here. And there's that H pattern in the weekly chart. Parameters to watch in the Dow, if you're listening to this as if it was the noontime show, so in 4 hours' time, if you're listening, if the Dow, what I said to subscribers to my opening call is that if the Dow is up 60 or more points at 10 past 12, that would impart knowledge to us that there's a good chance the Dow will close positively. But if there's a failure pattern, and for some reason there's an insidious slide that just keeps going lower and lower a little later in the day, if the Dow is only up 35 or less at that time, there's a good chance you get a weak close, and then we continue with the closes below the 9-period moving average. So just making it real simple. I'll also go to the volatility index to use that. The VIX right now is down 95 cents at 14.48. It made a peak A and then failed. Well, it hasn't really failed. It's still under that A, and that high was the other day at 18 point, let me put that in here, 18.78. Let me just type that in, 18.78. And we are now quite a lot lower. We're in the 14s. And I'm always looking at when they announce those splits, you know, how these 2 and 3 times long or short positions in the ETFs or ETNs just shrink and shrink and shrink. And my thinking was that the TVX is something that we follow very closely in my newsletter, the opening call. And what we're looking at is that when it gets to the 4s, there's a real good chance that they can announce an inverse split. They've just announced the inverse split, and very often that's getting closer and closer to where there's going to be some kind of a pretty decent rally in the VIX, meaning some kind of a pullback in the market. So those are the parameters I'm looking at. The QQQs have held extremely well. Look at this, 170.76, up 67 cents right now. 170.82 was that peak D little doji candle. We've made a rectangle. It's also a cup formation, more like a bowl actually, in the daily chart. The weekly chart is still under the major 175.21 all-time high back in the week. That was on 13th of March. And it plummeted down to 153. It's had 2 big, really sharp declines. A decline of, what was that? It was 12%, and then another one of about 11% or 12%. So maybe cumulatively we've done a lot of things, and I'll talk about what I'm going to be discussing in 2 weeks' time in my webinar. I'll start talking about it now. The relationship of techs to the market and tariffs to the cyclicals. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, I'm back, and this is the first hour. This is the 8 o'clock time, which will be repeated again at noon. It's my show. I will not be able to do the noontime show, so I'm doing it at 8 o'clock for a repeated broadcast. Well, let's look at a bunch of things. So the the IWM, right? So the QQQ is in a narrow range, but it's actually because of the techs holding well and the cyclicals being perhaps more impacted by tariffs. We're looking at the QQQs holding pretty well. The IWM missed by 1 penny, making leg G/C. So it's actually peak G/C. There could be one more pop to 164.40. Oh, that's a long way up, but there could be to go to a D. But at this particular point, you see the MACD, the moving average convergence divergence, you see this little M-shaped pattern? It's suggesting that you're starting to see some internal weakness, and the stochastic's much lower, and the on-balance volume is turned down, and the relative strength is turned down. So I'm watching this very closely. IWM, the Russell 2000, is led on the way up. It's in a leg B in the daily chart. I'm still calling it in the weekly chart. I'm still calling it that. It could have an alternate count of F/B. So far, the technicals are all confirming the rally. What I wanted to show you is look at the magnificent monthly chart. Look at this green line. First of all, look at this up channel. It got broken just once back in February of 2016. Went to 93.64 after hitting 129.10 high on the 20th of June of 2015. But look at this green line. We've just touched it, not we, the IWM, iShares Russell 2000 ETF, just touched it in a leg F/B, and the MACD deflected back up again. Stochastic cross positive, but it's only at 73%. It's under 80%. On-balance volume is reaching an all-time high. You're going to be watching this very closely. The leader of the pack on the way up, and I'm going to see over the next, by Tuesday to Wednesday of this coming week, if the IWM is trading under 161.20. I would say that that's probably a short-term top. But if it's trading in the 165.80 to 166.60 area, that's very good action. So those are the parameters that I'm watching. Meantime, back at the ranch, if you look at gold, and this is going to be very important, gold right now, and this is pre-market, remember, before the jobs report. It's down 5 at 12.99. Been acting very poorly because it should have, with the dollar starting to pull back, it should have had a much better rally until the dollar can actually go into the 13, 18 or higher area. I'm afraid it's just stuck in this range. It doesn't have to break down, but it's really not breaking to the upside. It's more sideways with, in the weekly chart, lower lows and lower highs. So it's just kind of stuck. Hey, this is going to be very interesting. Silver sometimes has its own path of movement, and it's also down a little bit under the 9-period moving average. High-grade copper, look at this, high-grade copper, stuck in the range as well at 3.06, hasn't really budged very much between 315 and 305 for a long time, just been there. In the weekly chart, you can see this lowercase h pattern comes straight down and makes an H right there. Now we look at the dollar. And the dollar right now is trading up 11 cents at 94.08. Now, this is going to be very interesting. The dollar, I hear a lot of people talk about the dollar saying this rally. They've been saying it for about a month or so. The dollar, it's over with the dollar. This rally should really peter out. It should start to pull back. This is it. And I'm saying to myself, I can understand what they're saying because the dollar came down from 103 back in January of 2017. And here it is just a year later, it goes down to 88. But this rally has seen technical strength in the weekly chart. And one of the reasons why we've remained long the dollar from 90 back on the 6th of February via the UUP, that's the trading vehicle, is that the weekly technicals just kept getting stronger and stronger. And if this is flat stochastic at 92%, and the MACD is still climbing, it says that 200-period moving average in the both the daily and the weekly chart at the middle 92.50s to 92.80s, that is tremendous support at this particular point. And even now we're looking at the dollar holding the 9-period moving average since it broke above it back on April the 19th. So this is a tremendous run in the dollar. It's impacting a lot of areas, but what it's impacting the most is the fact that if you look at the gold has just not been able to break out. And with all this volatility we've seen in the general market, it's a surprise to see that gold and the XLF, I'm going to include that here because we're going to go to the to bonds in a moment. This is very interesting. Look, the XLF is up 26 cents right now, 27.44. It went from the 28.50 area down to, for the second time, it went down to the 26s, went to 26.58. And now what's really interesting about this is that the weekly chart shows you this is that arch formation. And I'm not seeing anything yet. And the reason might be that the story that yields, higher yields, favorably impact the banks, that might be under pressure right now for other reasons. I'm not sure why, especially since Europe was having a tough time, and yet our financials really, I'm not sure if they're being affected by Deutsche Bank, but whatever it is, they've not participated in the rally or the general market rally. Now, if you look at the TLT, trading down 97 cents right at this moment at 120.25. Remember, this is pre-market, pre the 9:30 open. In fact, it's pre-8:30. The iShares 20-year Treasury Bond ETF, it's at this particular point, I've drawn in a rectangle, and it says between 119.80s and 122. I'm going to make it a little higher than that peak B. 122.52 was I'm going to make it even 123. Between this area, you might see something very interesting. The bonds, the bond yields, the TNX in particular, TNX, which is trading right now at 28.97, made a doji candle peak D, and the Chapman wave, we're always looking for peak Ds, fourth highest peak in the higher peaks, and we rate them on the way up. At 31.15 on the 17th of May, goes from the 31 area to the 27s. Watching this very closely because at 28.97 right now, it's filling this gap. And what's really interesting is that the weekly chart has an F/B, but it'll become more like a B if in the entire coming 2 weeks, every single day, if there's no trade below the low that was made at 27.59 on the 29th, but instead it chops around here. We might see yields in a sideways trading band, having made a weekly peak, F or B. I'm going to get an F for now just to see what happens. And the monthly chart is improved, and the monthly chart has broken the very long-term 31-year down channel, and it's done that for 4 months because the month just closed and we were above this green dashed line. So I think we're looking at the chance here that bonds, even though we might see the market pull back and money might flow from the insecurity of equities to the so-called security of bonds for a short period of time, I think yields are kind of stuck in the higher range. And that's going to be something else I discuss in 2 weeks' time in my webinar on the coming 6 months. Basil Chapman, Tiger Technicians Hour, Dow Futures up 133, S&P Futures up 13. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, we're back, and the futures have just reacted to the jobs numbers. I'm not sure what they are, but the futures were up 135 in the down. Now they're up 117 days young. Remember the first few moments of the move. That's not always the case. That's the way it's going to be. But you've got the E-mini is now up. It was up 16. Now it's up 11. No big deal. So it's still holding pretty well. We'll see what happens in a short while. And if someone can throw out the numbers there, if you've got them, I'd love to see them. We'll see. Okay. So what we're looking at here is that the TNX is up 1.02. That is the 10-year yield The numbers are up 223, up 3.8%. Okay, that's kind of range bound, I guess. Most importantly, what we're looking at here is what happens with the yields. Oops, I meant to do this before. I'm going to do it right now, even though it's going to mess up my chances for a brief moment. I'll talk about this. The crude oil has been very important to the transportation index. The airline index went down very sharply. The XAL went down very sharply when crude oil was rallying strongly into the 70s. So this is going to be very important. If you're looking at the 30-year, the white lines right here, the bars, that's the 30-year yield, the TYX is trading at this point, maybe it's a little late, it's a 30.65 up 70.79%. And that's what I'm talking about. Made a peak D in the weekly chart of the TYX. It made a possible F/B in the 10-year, that's the white one. And the cyan one is the 5-year. They're stuck in a range. And that range is going to be very important because they haven't taken out the lows of the week of the April the 6th so far. So we're going to be watching that. Not only that, wherever the futures go, in the very opening couple of bars of after an announcement, that's not necessarily the direction that the market's going to take. So let's see what happens in a short while. We'll get a better sense of what we're looking at. But as it stands right now, let's just go to the crude oil. I want to look at that. Crude oil is trading at this particular point down 91 cents at 66.14. There's that lowercase h pattern. It goes straight down, makes an arch formation, coming back and retesting the low that was made 4 days ago of 65.80. It's trading at 66.13. I'm always a little bit behind on the crude oil. Let's see what happens here. It's a peak D, almost certainly, because by 4 o'clock this afternoon, I just don't see us getting to the 72.90 area to negate a peak in the weekly chart. So this 200 period moving average right here at 60, around about 67.70, that's going to be very important because now we're deflecting away from that. And we might find we're going to a trading band that has the 65 to 64.80 support, and it has a lot of resistance in the 70 in crude oil. So let's just keep looking at that. So I had a question. So what positions? What am I looking at? Let me just make it real clear. We flipped to negative yesterday to short the Dow at the opening. So we got a very good price to give us a nice cushion because the Dow kept falling after that. I'm thinking that there's a chance that we actually go into a trading band and we keep getting support because of the rotation from the different sectors. If you had a unison thing with 90% of the stocks going in the same direction down, then you would have something very different. What we've done now from the 26th of January in the S&P and the Dow is we've used up time, and that's really important. We've used up time more than price. And if that's the case, then I'm looking at just retests of the Dow to a 23,500, 23,300 level. Not I'm saying it's a worst case basis, because I think what I'd said to subscribers recently, I think they're going to be 2, maybe even 3 really severe sell-offs that you're going to be able to buy the stocks that you've missed for ages and you'd like to get them. That's number one. Number two is, that doesn't mean to say they keep going down to lower lows and lower highs. We can go sideways, as I said. The February 9th low has not been taken out by all the indices other than the Dow. So this is going to be very important. That's the number one. That's just a shorter term trading range, because I think we're going to be testing the lower levels fairly soon. And then we'll make a decision whether we go back to long. That's number one. Number two is, within the semiconductor index, we are still long the semis from the equivalent of about 101 in the SMHs. They're trading now at 107.19, hit 108.81. We actually have the 3 times long position, and we've taken some off. We don't have a big position, but it's 3 times long, so still a pretty decent position, and that's up 23% or so. But this is exactly the area that we've got to watch really carefully. Why? Because you've got to a peak D in the daily chart of the SMHs. In the Chapman wave, we're always looking at that 4th highest peak. Well, we made a peak D back at the all-time high of 144.55 back on the 13th of March. That's when the QQQs also made their high. and pull back 16.5% to the low of 95.47. Now we've run up to yet another peak D. I do not like to see peak Ds under the previous peak D and in short bars. I like to see powerful bars that go to take out the left side high, and it's really only in C, or maybe if it's a D, it powers through that previous peak, and you get a Chapman wave cup and ladle pattern. We don't have that. Right now, what we have is the weekly chart is showing that the MACD is right on the cusp of either deflecting lower or maybe crossing positive. That's why I'd like to hold as long, the long position as possible. But I'm going to let the market tell us. So we've raised stops. We've done a whole bunch of things. Said if certain levels are hit, we can raise it even more. At this particular point, the entry point that we have at 101 in the SMHs should hold on any pretty mild but fairly severe pullback. Mild meaning in the monthly chart you don't see all that much. Weekly chart, it doesn't look great, but in the daily chart it looks quite severe. But overall it's really not a big percentage. And what happens if the market actually makes a bottom in June, say, let's say a bottom, not the bottom, but a bottom in June? I'm always talking about this as the earthquake and the aftershock. We had the earthquake February the 9th. Now we're having a whole series of aftershocks. So what happens if the semis actually hold better than the market, when the market finally turns around? If they've held, say, above 102, they could have a pretty decent rally. That's number one. Number two is, I also think that the semiconductors are really in their cycle in this phase. I think they've kind of used up all the energy. They need a rest. That rest could be sideways. It could be price. I don't know. It's very mixed. Look at MU. Micron has a huge move to the upside, goes to 64s, a massive move from back in the 9s and 10s just 2 years ago. And now look, it's starting to rest. You know, a huge turn down at peak D yesterday, leg E in the weekly, and yet LRCX, which is Lam Research, a big leader, a major leader, going all the way to the high of just 3 months ago. All of a sudden, Lam Research is just stuck, doing nothing. It's up $1.32 right now at 199, but it really needs to break first 205 to say it can tackle the high that was made at peak C on the 15th of May at 204.30. This is tough stuff. So I'm looking at this as a rotational correction. We'll see what happens there. Whoops, got another break coming up. This is Basil Chapman, Tiger Conditions Hour. This is the market before the opening, and the futures up 126 in the Dow, up 11 in the S&P, and I'll be right back straight after these important messages.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman back again, host of Tiger Technicians Hour, and this is a pre-recorded show, but live right now. It is 8:42 a.m. in the morning. So the jobs report came out. The S&P pulled back from the up 16 to about up 10 right now. The Dow was up 100. The futures were up 135, up 160. I'm just making it real clear to my subscribers, since we did go short yesterday at the opening. That if the Dow is up, it needs to be up 60 or more points at 12:10. That'll at least ensure a good chance of closing up nicely. But if it's only up 35 or less, that's not good action at all. The euro-dollar currency pair trading at 1.16 is down just a fraction. It's sitting right on the 9-period moving average. Look at this beautiful black line, this 9-period exponential moving average. From the moment it broke down back on the 20th of April, when it was trading in the 1.235 area, look, it's only 3 times nicked that 9-period moving average. Most of the time, it couldn't even get there. It has not closed once. Even yesterday, it couldn't close, and even today, it is under that line. It should close above it because the MACD is turned up. Stochastics turned up quite nicely. This is pathetic. So for the euro to actually get some traction, this candle right here with the long wick in the weekly needs to see next week, the entire week, no trades at 1.16 and a lot of trades at 1.18 or higher, and a close by Friday above 1.18. I will be away next week. I hope to be doing my show maybe once. We all work really hard here at TFNN. We do the best we can because we think of it as both education as well as wanting to be there for all our subscribers and for people. We have people requesting all the time information. I have to force myself to take a break because I just love the market. I've done a daily call on the Dow for over 40 years or something like that. So I need to take that break. I'll try to do at least one show that'll be maybe taped at 8 o'clock and played at noon while I'm away. But I will do my daily call almost every day, probably like I always do every day, but maybe I might take a break. We'll see. So in the meantime, back at the ranch, what we're looking at is the euro. It's kind of stuck here. The USD, and this is interesting, USD JPY, which had tracked kind of in the same direction as the dollar, and then failed completely when it turned down from peak D, Chapman Wave peak D, right there on the 21st of May at 111.396. It goes all the way down to 108.11 on the 29th of May, and now it's having a really good candle. It's up 0.74 at 109. If it closes above 110.10 in the next 2 sessions, wow, that's going to help the dollar. But in fact, it was going in a diverse direction to the dollar. I'm not talking that it tracks the dollar in in chart formation. I'm only saying that very often it goes in the direction of the dollar, and sometimes it leads the dollar. There were a couple of times back since the September low of the dollar where the yen, USD JPY, actually led the dollar up. So it should have led the dollar down now. Dollar just, well, I guess, look at this. The dollar did pull back. There it is. It made a peak F. I'm calling it an F for now, at 95.03 on the 29th of, the 29th of May. And look, here it is at 94.19. It just does not want to give it up. I spent a little time before talking about what I'm looking at is strengthening the dollar. What I'm looking at is the weekly chart having really strong technicals, confirming the rally. In fact, way stronger than the technicals were when it was making its high back in November of 2017 at the 95.15 level. Much stronger technicals. And that says to me, look, this first day of June, new candle, we've actually started the month above the close of Friday. And that's kind of nice to see. And the MACD hasn't crossed positive. There's a lot of work to be done in the technicals. So now let's just do a couple of things here. I'm going to go to the E-mini futures. I haven't had a chance to do anything with them. Usually I've notated, I've traded, I've done something with them. But let me just go to this particular low right here. We'll do this real quickly because I want to give you parameters to look for, which I think are going to be pretty important. So peak A, 10-minute chart, peak B, peak C, and we go to a peak D, and we squeak to a peak E right there. And that peak E was at 2719.75. Trading right now just 3 points, so 2716.75. If the E-mini at any point in the next, between now and 10 past 10, if it trades for 3 10-minute bars below 2712, I think that the E-mini is going to have a tough time. If in fact it breaks into the 2723s at any point, that's going to be very good action. So as it stands right now, what I'm looking at is a counter trend bounce. This is what I'm thinking. And those are the parameters to look for. Let's get back to the nitty-gritties of the market. I'd spoken about the VIX before, and then I went off and didn't give you the parameters that I'd be looking for today. The volatility index down 97 at 14.46. If at this time, if in my show, which will be at 12:48, at 10 minutes to 1 Eastern time, if the VIX index is trading below 1450, there's a good chance that the market will close quite strongly today, or maybe very strongly. But if at any point there's a sudden reversal and you see the VIX start to go above 14.53 and the market has given back 35 to 45% of the gains, the intraday gains, that says, you know what, it's just going to be real tough, probably going to close mixed. Maybe, again, the IWM and the Qs rally very nicely, but the S&P might give back quite a bit of the gains. So that's the way I'd be looking at it. So the most important thing that I'm looking at right now is that within the context of the markets, if you look at the New York Stock Exchange, NYA, now people hardly ever talk about the New York Stock Exchange. This is one of the very important ones. Look at this pattern in the weekly. There's that H that goes to the lowercase m formation. And look at the way it's closed on the 9-period moving average in the monthly charts. Twice now, 2 months in a row. It's just kind of sitting there like it's hanging its legs. This is a tree branch, and it's sitting there, hanging the legs over. Has to be very careful not to fall. So the New York Stock Exchange down 99 yesterday at 12,527, made a peak A, B, C, D. A peak D right there. Down arrow. I have to give it a down arrow, even though it could come back very strongly. Why? Because the MACD closed very poorly, and the stochastic's way down at 34%. And there's this buy mode completed to a D. Now we're consolidating. There's that H to the M pattern. Just happens all over the show. I want you to look at the IBB. So the IBB is trading at 108.45. It's in leg D, another leg D, except there's a little difference here. That arch formation might be making another arch formation. I'll draw it in right here. But a close decisively above the last peak, in this case, that peak that was made a peak C on the 14th at 108. It went to 108.48 and it's trading here at 108.45. It's already been above it and it's closed above it. Says to me that watch this one because this could be one of the sectors that's under the radar that fund managers are saying, hey, look, it's holding quite well. It's not breaking down. So they might be putting some money in there. I'm watching it closely. I'm not yet convinced. We'll see. But it's one that I'm keeping my eye on. Basil Chapman, Target Date Futures Hour. Futures up 150, 160. S&P's up 12, 15 up right.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So just before we go to this is our final segment here. A couple of things. You've got Larry Pesavento coming up, and it should be another wonderful show with Larry. If you're listening to the recording of this show, it'll be Steve Rhodes, another great show with Steve as well, also with Dave White. Of course, Tom O'Brien wraps it up today, Friday. So keep tuned, and don't forget, I've got a webinar coming up on what should happen in the next 6 months. And it's going to be really challenging for me. I believe I'm starting to pinpoint areas that I think are looking really attractive. So let's see what happens there. Meantime, back at the ranch, we're looking at Amazon, which pre-market has just made an all-time high above 1638.10. It's at 1639.50. If you're looking at, it's really quite important. Look, Facebook is making a new high. It hasn't gone to the 195.32 all-time high, but it's at 192.85. Nice reversal in the monthly chart in a V-shaped pattern. So the tech sector, the whole tech sector, holding really well. The cyclicals, if you look at Caterpillar, look at Caterpillar. It's not that great, not a good chart at all. If you're looking at Triple M, not a good chart at all. If you're looking at UTX, which we own, a really nice rebound, but it's really not a great chart. So the cyclicals have been impacted. The techs are still doing well, and that means there's a bifurcated market, and keep that in mind. That's the reason why any pullback could be ameliorated by this rotation into sectors that are working and getting out of sectors that are not working. So that's kind of what I'm looking at. And as far as the semis are concerned, the SMH right now is back to about unchanged. I'm watching this really closely. I think they led the market on the way up all for 2 years, and on the pullbacks, they haven't made a new recovery high. Going to be watching this very, very closely because they are a bit of a tell for the tech sector, in fact, into the next 3 months or so. So thank you for being here. Have a wonderful weekend. I will be on vacation next week, but I'll try to do at least one show. I will do my daily newsletter. Have a great time. See you soon.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.